Subscribe to our YouTube channel and press the bell icon to get the latest updates.
Good morning, everyone. The war bugle is blowing. Explosions can be heard. And just like any other preceding war, the Russia Ukraine crisis might be the precursor to a new world order. The way sanctions have been issued against Russia, geopolitical risks, one of the most neglected aspects in equity investing under normal times, is once again at the forefront. Especially as this development follows a crash in the Chinese tech stocks in wake of regulatory crackdowns. In my last video, I had talked about the opportunity from this crisis in the green tech space. Do use the links below the video in case you haven't watched it yet. In today's video, I want to draw your attention to another sector which I believe could benefit from the ongoing crisis. It's none other than defense. Russia-Ukraine war has made few things very clear, that the best way to avoid war is to be prepared for it, that you cannot rely on external help in the face of aggression from any enemy or country which is more powerful or bigger than you. Now that we all know that India is not insulated on this aspect. It has been subjected to unwarranted acts of aggression from China, a powerful nation that the West may hesitate to stand up to. We'll have to help ourselves and build our own defenses as we are surrounded by some hostile neighbors. No wonder then defense is at the center of Atmanirbhar Bharat. In drone segment alone, the government of India has come up with policies that could bring an investment of rupees 50 billion over next 3 years, and the revenue from drone manufacturing could grow from a mere rupees 60 crore per annum to rupees 900 crore by FY24. Now, there has been a focused effort and policies towards indigenization of defense equipments. What's more, the aim is not just to be self-sufficient but be global suppliers as well. Already, the defense exports have grown by over 300% in last 5 years, and now India is exporting to more than 75 countries. By 2025, defense exports are expected to grow almost 5 times. In today's video, we'll look at the companies in the defense sector that could benefit as defense becomes a priority amidst the global economies. I would like to add a disclaimer here that none of the names that I share in this video should be seen as stock recommendations. Nonetheless, it would be good to be familiar with them and track further developments in the sector. Investors should keep in mind that if they are playing pure defense theme, there is a potential downside to it. The orders could be lumpy, sensitive to the budget allocations towards defense. The business, especially in case of pure manufacturing firms, could be asset heavy. Therefore, there could be a heavy debt on the balance sheet if the business becomes capital intensive. The orders could be lumpy, sensitive to the budget allocations towards defense. The business, especially in case of pure manufacturing firms, could be asset heavy. There could be debt on the balance sheet if the business is capital intensive. So I believe the right way to play is to look for companies working on defense technologies and IP that would find applications not just in defense industry but outside as well. This will include the likes of communications, sensors, radars, imaging systems, advanced materials, unmanned vehicles or drones, and so on. It would be good to look for companies where the market is not limited to India but is global in nature and therefore there is scalability in the business. Now, when it comes to defense bets, we are all aware of the front runners like Hindustan Aeronautics, Bharat Forge, Bharat Electronics, Paras Defense, Bharat Dynamics, and so on. I talk about the top 3 on my list. For this video, I focused on players where the PE is not sky high and there is growth in the business, along with a strong order book and opportunities to do business beyond defense sector as well. The first on this list is Avintel. The company specializes in integrating technologies related to wireless front end, satellite communication, embedded systems, signal processing, network management, and software development. Its customers include DRDO, Indian Navy, ISRO, Bharat Electronics, Indian Army and Air Force, Boeing, and Lockheed Martin, and so on. It also caters to railway sector for projects such as implementation of real-time information system. It has recently forayed into high-frequency communication system and radar domain and is looking to introduce more products and services and move beyond catering to aerospace and defense. The company's fixed asset turnover is better than the industry, and it's a tech-focused company where the value comes not from physical assets but IP. FY21 was the year when the company reported highest revenue since inception, and it also signed its highest value contract of order from Indian Navy. 8.7% of the revenue is invested in R&D in FY21. While it is difficult to estimate where revenues could be beyond 3 years from now, there is enough visibility for 3 years. The company reported Rs 78 crore of revenue in FY21 and has reported an order book of over Rs 150 crore in first quarter FY22. The management is confident of profit growth. It will benefit from the policy of the government that requires indigenization in the defense segment, and the management is focusing on applications in sectors beyond aerospace and defense. These could include medical electronics, IoT, and nanosatellites. The potential issues could be shortage of semiconductors. The second on my list would be Bharat Electronics, a PSU set up to meet the specialized electronic equipment needs of Indian defense services. However, it is not limited to defense sector alone. Over the years, the company has diversified into areas like homeland security solutions, smart cities, e-governance solutions, space electronics including satellite integration, energy storage products including e-vehicle charging stations, solar network and cybersecurity, railways and metro solution, EVMs, telecom products, passive night vision medical devices, electronics, composites, and other software solutions. The order book at the end of December 21 for the company is reported at 560 billion, which is 4 times the revenues of FY21. The balance sheet is debt free, and what I like about the business is that it has increased its revenue every year in the last 18 years. The return ratios and margins are healthy, and being a PSU, it also offers dividends every year. The third on this list is Cyient, an established player in engineering R&D and IoT services. It helps aerospace and defense OEMs and tier 1 suppliers transform their product lifecycle by offering them engineering solutions. The other industries that it caters to include communications, rail transportation, medical tech, utilities, oil and gas, automotive, and so on. The business is low debt. The financials have been good barring the dent amid pandemic in FY21, and if 9 months of performance is anything to go by, the company is already staging a healthy recovery. By the way, there is a lot happening in the startup space when it comes to opportunities in the defense sector. Here are some in which listed companies have shown interest. IdeaForge is a drone startup in which Infosys has taken stake. Then there is Asteria Aerospace in which Reliance Industries has taken stake. Asteria designs and develops drone-based solutions to transform enterprise operations using aerial data. The third on the list is IROV that offers underwater inspection with its marine robotics solutions where Gale is invested, and Alpha Design Tech that designs and develops defense electronics and avionics that has been acquired by Adani Enterprises. I would like to reiterate not to treat this as buy recommendation. The purpose of the video is to bring to your notice the opportunities in the defense sector that are worth tracking. If you found the information useful, please like the video and share your comments. And do subscribe to Equitymaster YouTube channel for more such updates. Thank you for watching. Goodbye.